Good morning, everybody. Happy Saturday. Welcome back. I hope you guys all brought a pen and a notepad. Very important that if I ever go live with you guys to always FOMO into a notepad so that you can write this stuff down. Okay. I see a lot of people struggling still with trading. And I mean, if it was as easy as drawing flags, everybody would be a winner. And it's really not. Like drawing shapes and stuff on your charts, that's and finding divergences, that's some of the work you got to do, but it's literally the least work you're ever going to have to do in trading. Okay, a lot of you know how to spot flags, you know how to spot divergences, you know, kind of, you got a good sense of what you're doing, but there's just something you're missing and you can't quite put your finger on it. What are these 10% of traders doing that the 90% of traders are not doing? I'm going to give it to you right now. The holy grail, the magic secret of trading right now. If you thought risk management, you are on point. This is where you're blowing it. You don't understand risk management yet. You don't understand the power of compound gains yet, which we'll get into later on. But the main point here is risk management. Some of you guys, you know how easy it is to make money. You make money really easy. Sometimes you make money before you even leave the toilet. You wake up, it's New York Open, it starts ripping in your favor and close the trade. You haven't even brushed your teeth yet. So why can't you do that consistently? Because when the market is not in your favor, you end up getting chopped up. You end up emotionally trading. You end up chasing candlesticks, even though there was no model. This is how I operate my trades. And if you don't know me, I am Master Friend. I am a tutor in the 99. I trade, well, I trade charts. Doesn't really matter what asset class it is. I'll trade bananas for headphones if the chart looks good. But CEST. All right, this is the most important part of my trading plan right here. And for those who don't know, I am the I help people fine tune their leverage skills. I also have a system that I've created that works quite well. But with leverage, and a lot of you people, this is where you're ruining it. You're over leveraging. You're way too heavy in your positions. Okay, that's not proper. And a lot of these things are probably going to strike a nerve. And that's my desire. I hope it does. I hope it strikes a nerve. I hope at some point you get upset with what I say and you take a good deep reflection, a good look at yourself and hold yourself accountable. Realize the mistakes you're making and make a conscious effort to change them. Okay, so the first thing in a trading plan is conditions. What are your conditions for a trade? Is there a, do you like to play the 786? Do you like to play divergences? Do you like to do what Sam does and wait for a bottom and then take the flag up to the 200? You're going to have to create some conditions for your trading plan. And once these conditions are met, then you can engage with price. But as most of you know, price moving doesn't quite equate to you being in a trade because those trades 95% of the time don't work out very well, do they? So you must be looking in the market for specific conditions. Okay. So for example, Sam has, I think, a 9-point checklist. I'm pretty sure it was 9. It might be 5, but I'm pretty dang sure it's a 9-point checklist. Okay, divergence, 786, point of control, tight moving averages in a bullish pattern, etc. Okay, those are conditions for his trade. Then once those are met, you have your entry. Where's your entry going to be? Okay. Let's say that price is hanging out here, right? And then it does this little thing that we like where it breaks up and then it retests support right there. Okay, now here's where you have your little baby cup and handler, your little baby flag. Okay, let's say that we're going to use Sam's model here where he likes the little banana curve to the 200, right? Well, now it's flagging out. And now the 21 is creeping up and there's divergence, right? The tight moving averages, the 200 is the outlier. Now he has a trade. So Sammy loves this model. Me, I love that one. Actually, as a matter of fact, I love the turtle soup model. But this is my money printer model here. If I just take these like that, there's my money printer model right there. Here's Sam's model here. Sam's 200 SMA model for continuation. All right, so where's your entry? Well, for me, I like the 786. That's my go-to entry. One second. Sorry about that. So my entry technique would be right here in the 786 retracement. Now, if you like bull flags, that's going to be that guy right there. Now, this is also obviously a crude depiction, but essentially price action just repeats every day, all day. It doesn't change. So that where's your entry? And then you're going to have your conditions, entries, stops. This is one of the most crucial pieces of a trading plan right there. Your stop loss, your protective stop. You pretty much, I'm just going to assume that everybody in here has been in a trade and you've been in profits and you don't pay yourself and your stop loss ends up getting, not hit, but it's on its way to it, right? And then you'll creep your stop loss. Now, let's say you're bullish. Add some tools here today. Let's say you're bullish and your conditions, everything was met, and you've got your 3-to-1 R, everything's cool. And then price action starts, it was in your favor for a moment and then starts creeping down. And you're like, well, I'm just going to hang on to the idea that this is bullish and I'm going to move my stop down. Now you've just incurred more risk in one single trade than you were willing to do. Do not move your stop loss ever. I'm going to teach you why you don't do that, but don't do it. And you must have one. If you don't have a stop loss, you are saying to the market, which is me, which is Sam, which is everybody who has skills beyond what you do, you are handing your money to us. Okay, this is the marketplace. There's people on the other side of your trade. And if I'm on the other side of your trade, I signed the same papers you did. So I don't feel bad. That's how trading works. So you want to be riding the waves with us. You don't want to be on the other side of our trades. That's not to say you can't counter trade us and win. We don't win every trade. Eventually, our TA will get in the way of you. And you'll just, be like, okay, I see this. I'm going to hit it. This follows my conditions. Boom. And Sam and I do it all the time. We counter trade each other all the time. Typically, he wins, but I can find, let's say he's short and I'm looking for a long. I can actually find a long scalp inside of his bigger short idea. So when I come out of the woodworks, because I don't usually post too many Bitcoin charts, it's been really favorable lately. So I have been, but when I do come out of the woodworks, and let's say Sam's long and I'm short, or I'm waiting, let's say Sam's long, but me personally, I'm waiting for a dip first because I like to buy dips. People be like, oh, Master Friend's short and Sam's long. And then they act like it's this big competition. Write this in your notebook. It's not about being right or wrong. It's about being profitable. That's all that matters. There is no right or wrong. Every trade you open up is a loser. It's got fees, it's got slippage, what have you. It's a losing trade. The moment you click that button, it's a loss. and you have to dig your way out of it. So the sad reality of trading is you have to become a professional loser. You know how easy it is to make money, but it's really, really tough to lose money professionally. Okay, and targets, the last one. Conditions, entries, stops, targets. These must all be in alignment before you consider any sort of a trade. If you're chasing candlesticks, if you're a breakout trader, if you're trying to trade momentum, how's that been working out for you the last few weeks? It was working out several weeks prior to those few weeks ago, but it hasn't been working out very good lately, has it? So I'm going to help you guys with a solid trading plan. Okay, so these conditions, you can use Sam's checklist. Absolutely. That thing is awesome. It's so awesome. Another thing that is not talked about too much is patience. Of course, everybody's like, patience, patience. You have to have patience. What are you being patient for? If you don't have a model, what are you being patient for? You have to have patience for what? Wow, you got to have patience for your conditions to be met, right? That's right. That's what you're being patient for. You do not trade these markets. You do not put your money in these markets for me to take, or Sam, or anyone else with skills, without having your conditions met. And you definitely don't put up more than you're willing to risk per trade by moving your stop loss, because the more money you put out to the market, the more that the other side of your trades are going to take it. It's just like you being downtown Baltimore with, on a bike with a wagon and a pile of money. There's a pile of money in a wagon and you're pulling it on your bike in downtown Baltimore. There's going to be a bunch of people that come and take your money. Like, you're not going to survive. Okay. It's literally that equivalent. And if you don't know Baltimore, it's pretty ghetto right now. It used to be cool. The patience to wait for your model is going to be what really, really, that's the hard work. Okay. I'm just going to be plain out. This is the hard work right here. Risk management and patience. This is what you're not doing. You don't have a trading plan yet. You don't have a price action model. I'm going to try and help you with that today. Okay. But from here on out, every person here watching this, every person watching this in the future, there's no excuses anymore. You're going to have to make one of two decisions from here on out. You're going to say, it's not for me. I'm going to pack it in. I tried my best. I can't get it. I don't know what risk management is, and I don't care to know. And I'm out. Or you can submit to what a professional trader really does and then change your life. You have the opportunity to change your family tree's financial history. All you're the man. This is your mission. This isn't your brothers. This isn't your sisters. This isn't your best friends. This isn't your worst enemies. It's not your moms. It's not your dads. It's not your children's. You might share it with your children, but this is your personalized learning curve mission. Nobody's going to pat you on the back. Nobody's going to cheerlead you. You need to be your own cheerleader, your own CEO, your own CFO, everything. You are the CEO of Me Incorporated. That's your company. And you got to treat it like a Fortune 500 company. Why do you think Sam wears suits on YouTube? The guy has taken his life by the cojones. He wears suits on YouTube. It's because he's a trader. He's a millionaire, self-made. That's a big deal. And we all want to get there. All of us. That dude just changed the whole financial history of his entire family tree. Just by trading. And you know what he used? Patience. Now, the thing about technical analysis is it looks way cooler than it is. Trust me, it's trading is way more simpler than indicators and all this stuff on the charts that don't really move price at all. Okay, none of those indicators, none of that stuff actually move price. It's just giving you an average based on momentum and a probability that it's likely going to go in your favor. Now, one of the most crucial parts of the patience is the trust. If you don't have trust in your model, you're not going to have patience to wait for it. If you don't have a model yet, that's fine. You'll get one, but you got to practice. If you are practicing or learning with live money, you're not learning. Your brain only has so much power. It is powerful, but it only has so much. It's like your brain is like the starship. Captain Kirk's like, yo, all power to the engines, turn the shields down, cut the lasers out. We're going warp speed right now. That's what you are. Your brain is a starship. The engine is your patience. The lasers are you in a trade. Now, are your engines working properly while you're firing lasers off at the enemy? No, they're not. The relation is when you are engaged in a trade and you have monetary value in there and you're choking and you don't know when to take profits, you don't know when to close the trade, you're not learning what the charts are trying to show you. Every single day, your model, whatever it is, repeats hundreds of times a day in every time frame, in every asset. And all you need is one. And you don't even need one a day. You could do 3 a week. Heck, you could do 2 trades a week and make more money than you ever thought possible. Well, you see people busting out 30 trades in a session. If you're struggling really bad and you're losing money, I'm telling you to go to demo. You come to your trading view, you click this little button right here, and then you click on paper trading. Boop. You give yourself some money. This was for a buddy. I gave myself 300 grand and I'm up 60 grand, $60,846. Just screwing around with you guys. All right. So this is what's going to get you places. Okay. You telling yourself that you need the real experience with live funds. That's what everybody says. And everybody ends up quitting. Okay. 90%. There's your statistics. I need the real experience and I need real money. No, you don't. You're just going to lose it and I'm going to take it. People like me are going to take your money in the markets. You're going to click buy and I'm going to click, okay, give me, because you're buying a breakout and I'm selling you my breakout, dude. That's the reality. I'm buying the bottom. By the time you're getting in, I'm selling you my position. You're buying it off me. And people like me. Okay. So by going to a demo or paper trading setting, I know it's going to feel like garbage. You're going to feel like you're backtracking. You're going to feel like you're never going to get this. It's going to take me way longer than I thought. Yep, it sure is. You're right for the wrong reasons. It's going to take you way longer than you thought. But if you go to demo, I promise you right now, this is a master friend promise. If you go to demo, you will fast track yourself light years beyond where you would be in a year if you keep trading live money before you're ready. In order to cash in that promise, you're going to actually have to come into demo and learn what you're doing. Okay. So risk management, we're going to go over this really quick. Now everybody knows 3-to-1 arm, right? You're risking $1 and you want to make 3. That's essentially what we want to do here, right? Come on now. And 3. So if we risk $1, we would like to gain 3. This is risk management, and you can't move your stop loss. Okay. We're going to go over some examples, and I'm going to show you how risk management plays a big part in compound gains um, for your portfolio to grow exponentially. Like my students that watch me run up funded accounts, they wonder how I do it so quickly. It's compound gains. I passed a challenge that I needed 20 grand for in 5 days. So 5 trades it took me to make 20 grand, right? It's like they're blown away. How do you do it? You compound your gains. Every time you risk 1%, you're making 3%. So now your next trade, you're risking 1% of that total. Well, every time you win 3%, risking one, your 1% risk becomes greater every trade. Okay, so like for example, if I was taking this guy and taking it to there and I had a stop loss, let's say here, 3-1, right? Boom, my trade was hit or my trade was nailed. It took it off the SR flip right here. Boop. Not hindsight either. A lot of this stuff was called out in advance. My people who rock with me know exactly we called this bottom on Friday, the monthly bottom. That was it. And that call's been in profit ever since. But 3-1. Okay. You take your 3-1, you've got your model, you've got your breakout and bull flag and SR flip. Here's Sam's model right here. Boom. We can go to the 4-hour. And he called this. This ain't hindsight. This is his model. I just showed you in my crude depiction exactly what I was looking at. Right? So I like to buy down here. Okay, Sam likes this flag here. So we got the breakout, bull flag, another breakout, bull flag. This is Sam's model. Now, why are these bull flags banging so hard? Because it did a stop hunt first. Anytime you raid liquidity and you're looking for a breakout, this is where you're screwing up. Press reverse. What do I mean by raid liquidity? I mean, everybody who's playing this big falling wedge here, where's their stops? Right here. Right here. Okay. My condition for all my trades, number one condition is there a stop hunt? Boom. So those of you that were with me on Friday in the 99 when I called this bottom, okay, when I turtle soup, I literally bought the bottom, you guys, with no emotions, no nothing. I bought that. And it was actually right about here. But still, I bought that bottom. It came flipping up, broke market structure, retraced to my discount 786. And I was mentioning this 4 hours is going to take a while to play out. That's where we're going. Boom. I don't know when, probably Monday or Tuesday, but those things, my measured moves pretty much bang. As you can see, the 1.5 deviation was met, the 1 and the half. So I use my extensions on my fibs for targets. And if you guys want those, here they are. Can just take a screenshot of that. All I do is I put negatives on my fibs because when you pull your fibs from low to high, your extensions go down. I put negatives on mine and they go up, so I don't have to flip my fibs every time. So my stop hunt, my swing break, my retracement. This is my textbook model right here. This is what I play. This is all I play. And this is my money printer. I've given it all to you for free. You don't need to pay me for education, okay? You don't need to, FOMO in to my classes. You just have to hunt a model. And I've given you a high probability model that repeats constantly. And subsequently, it just happens to be the bottom of every single candle. Okay. It just depends on what cycle you're playing. If you're playing a 24-hour cycle, you're going to find a bottom. Me personally, I was playing the 1-month cycle where I found that bottom. Okay. Then it money printed on out of here, ran to my targets, and all is well. But back to discovering what you want to find as a model. Okay. You can see just from this piece of price action here that price has not been very friendly for the last little while. And it's actually been really, really rough to trade. And this comes after the heightened euphoria that everybody's seen for, 7 months straight. After 260 days of nothing bill, 240 days of nothing bill, then 3 months of pump, or sorry, I think it was like 7 months actually, 7 months of pumpage. And then we reached the all-time high and look at what we've done. Okay, we hit that all-time high. That all-time high is nothing more than a pool of liquidity. Okay, from everybody shorting and not paying themselves, there's the pool of liquidity right there. Now notice what price action does when it hits it. Nothing. Why? Because the market makers got their fills. I said a little too much, but once you take a higher time frame pool of liquidity, it's going to do one of two things. It's going to freak out exponentially and just start mooning or dumping, depending on which way you're going, or it's going to be very lethargic. So what is a higher time frame pool of liquidity? Well, it's the monthly time frame. Okay. So once we dabbed up into there, we've been 1, 2, 3, 4 months now of just chilling. So this was 1, 2, 3, 4, 5, 6 months, excuse me. So we had 1, 2, 3, 4, 5, 6 months of nothing, and then 6 months of pumpage. And now we got 4 months of nothing so far after hitting this pool here. Okay, so, write that down. Go and study, go and watch these things unfold. Okay. So all these bull flags in the smaller time frames working out so good because we did a stop hunt. Okay, I'm going to give you another little piece of the puzzle here. Okay, when you're pulling your fibs, I'm not pulling from where the books tell me ever. Why? Because everybody listening to the books is getting spanked. That's why. So I'm going to pull from right here. Okay, this is the closest piece of consolidation here, and you can see price aggressively left this area. So this is my new range. This is my range, and this is my discount. Anything under the midway point is a discount, and anything above is a premium. This is for your notes. Your bull flags are likely going to fail in a premium. Your bear flags are likely going to fail in a discount. Now, why would I say it that way? Because as a new trader and coming up, you're likely just hunting off all the bull and bear stuff that plays out. It's also equally, and if not a little bit more important, to find the ones that fail. So you know what that looks like when it's going to come after you. Okay. And I'm giving it to you. You're going to find your best shorts in a premium market. So you're looking for bear patterns. You're going to find your best longs in a discount. So you're looking for bull patterns. Okay. So at the time, we were chilling in a discount here after taking all these double bottom, triple bottom here. As you can see, you don't need book map. You can see these guys from space. Their stops are here. That's where the books tell you. That's a bull flag. That's a swing low. Boop. And then it turns around, right? Now everybody's chasing this bull flag. You got this double top here. That's bait. I am so aiming for that right now. It's not even funny. But you got this double top in a premium. Think about it for a second. What did I just tell you? Bear patterns work in a premium. So we're in a premium market. Now I'm going to give you university grade rules for a double top. The first top that has a wick, and I'm really only doing this in the higher time frames. Okay, the lower time frames I don't put much weight on this stuff, but this double top here, university level, perfect. You come into the kill zone and you can dab in here a couple times. You can wick past here. That's fine. You can close bodies back below the box. It just has to touch. The only thing is you can't close a body above the kill zone or it's a higher high. Okay. This is a equal high. Even if it wicks past, even if it closes bodies down here, as long as it touches the kill zone. Bearish engulfing candle. This is where traders are triggered short. Okay. The closure of this candle, stop losses above the highs, and look at that double top worked out beautifully, targeting the low here. Okay, so this double top did reverse price. It did its job. It went to liquidity. It didn't have to come all the way down there. It could have just came to here. All right, it even could have came to somewhere in here, but it wanted these guys. So you've got this beautiful double top here in a premium market. Great. Okay, so that plays out. And then you got this bear flag. Now, equilibrium, the midway point of the range. This is the worst place to take trades from. And as a matter of fact, a lot of the trades that you're taking that just walk on you are right here in equilibrium. You never knew it. This is going to take a while to get used to, but once you break the range here, look at from that low to this high, we broke the range. So we got a new range here. So now we're in a discount of our dealers of our swing here, of our price leg here. We're in our discount. Now we're going to take the dealer's range. The dealer's range is just the new impulse that price makes. That's all. Okay. So we crash back beyond equilibrium of the range from a discount. Oops. And now we're back in a premium. So if you are trying to long in here, this can come all the way back down to equilibrium. It can even come back down to its own 786 before ripping again. You want to find shorts in a premium and longs in discount. So if you didn't long here with us, don't feel like you've missed out. There's going to be hundreds of these trades every day. Notice how I haven't even left beyond the daily time frame yet. I know a lot of you are itching right now. You're like, when are you going to get to the 1 minute? I'm never going to go there. You don't ever need to be there. And as a matter of fact, the 1 minute is punking you hard because you think that price is going to rip in one direction solid every time. It's not. Does it ever? No. It goes up and then it comes down. But you're stuck on the idea that price is just going to do this. It's just going to do this. You're like, I want to get, that's FOMO, fear of missing out right there. That's FOMO at its finest. Price is just going to do this. It's not. It's not. And as a matter of fact, it's going to do this more than it does this. That's a fact. Okay. Don't take my word for it. Go and look at the charts yourself. It consolidates more than it expands. Okay. So don't be looking for expansions, especially on Saturdays. Come on, guys. Come on. I'm going to give it to you right now, okay, for your notes. The Saturdays you play, the weekends that you consider taking trades, not that you have to play them, okay? Don't convince yourself that it's going to move every Saturday or every Saturday that I tell you, but I'm going to give you a little hinsky poo. The middle 2 weekends of the month are when Bitcoin has the highest probability that it could expand. That's not to say it's going to for sure every middle 2 weekends of the month. Those are the only 2 weekends that it's a high probability that you can expect an expansion. Okay, so we're not in that weekend this weekend. I'm not expecting today to do squat, and I would love it if it did nothing, because then it would make me a little zone right here for support that I would love, known as a fair value gap. And you need compressions for that. You need price to go nowhere. You need it to do nothing so that you can make the fair value gap. Anywho. So this is looking like a good spot to aim for. That doesn't mean we're going to get it, but we aim for it, and we don't need that to be profitable. You're going to see what I mean in a minute. So back to the model. Now let's go into the 4-hour chart. Okay, so this was the money printer model that was called. And I leave this red line in here to show you where the liquidity was swept. Now everybody's thinking that this is an SR flip. Who all thought that this was an SR flip to the downside? And that was a bear flag. Well, your bear flags fail in a discount. That's what you anticipate. Could it have worked out? Sure. Why not? But when my model shows up, I'm playing it, and I don't care if I lose. And I'm going to show you why right now. Okay, so here is my money printer model in all of its glory. Military grade, perfect. Comes down for a discount, snaps right out of the discount one more time, snaps back on out, makes this bull flaggy thing. Look at the double top right here. Okay, double top on a resistance point. Where's the liquidity? That's all I care about. Where is people's stop losses? I know, sounds bad. That's trading. Well, I'm going to buy these long stops right here, which we did. And then I'm going to sell to these short stops right here, which we did. And that happened. Well, everybody's looking for selling pressure. Does that look like selling pressure? So what was it that turned price on a dime right from that bigger, larger 786 in the daily time frame that I showed you? How was I able to predict the entire world's buying pressure to the day and pretty much the time? Um, I'll leave that for your mind to wander, but I'm a firm believer that these markets are not random. And therefore, I trust my setups. Okay. So in the 4 hour time frame, we hit this money printer beautifully. So targeting the opposing swing high right there. This is where traders are going to have stop losses. Okay, now we were targeting this double top, but I didn't get all that. So I put my stop right inside of this guy here and bang. So now I've got a 7-to-1 R. Mine was actually a little bit more than that, but not bragging. So I won $7 out of the one that I risked, right? So I risked 1%, I made 7%. Now, right here, one could have thought that this was a money printer, and I did, okay? And I took it. Now, I was profitable on this trade, but it did come against me, okay? So it bounced off the 618, made its little flaggy poo here, and then ran up for the 200 SMA, okay? It couldn't break it. So I collapsed, I think 3/4 of my trade, 75%, let some run, and it came back. When this happens, okay, let's say that this fails on you. Let's say you get in on the flag here and you were targeting this double top because that's just obvious. Where what do I mean by obvious? I mean that when people are trading and they're chasing price, that's where their stops are. They're at resistance or what they feel is resistance, right? So I target it because I know there's people there. You can't buy if nobody's selling. If I'm going to buy long, who am I going to sell to? The people buying. Well, the shorts have to buy their position back to cover because they're in a sell short. They've sold short. So how do you cover that and close it? You have to buy it. So these buy stops right here, I'm selling them my position. These are the guys that are chasing breakouts. I'm buying the bottom. They're chasing the breakout. Who are they buying off of? Me. I'm selling. Or you if you're going to, catch daggers. But as soon as this starts breaking out of here, they're chasing it. And you've done it. Okay. I'm selling you my position. I'm getting the heck out. Boom. Wrecked. This is okay. Because this is another piece of the hard work of the puzzle here. You taking your model and finding out over a course of time, 3 months, a year, whatever, how many times it won versus how many times it lost. And this is what's going to bug you out because you have to be honest. You have to be honest with yourself in the trades that you would have taken or would not have taken. Okay. It's going to be tough to do this because while you're sitting there and price is flipping out and you've talked yourself into a trade and you're highly emotional, would you have really taken that trade? Would you have really taken that execution right at the 618 perfectly? Would you have been brave enough to buy that down close candle? Would you have been brave enough to buy that down close candle as the 21 and the 9 SMA are creeping up, right? These are all things you've got to be honest with yourself about. But within your back testing skills, you're going to find, okay, I like this as a standard, okay? Remember when you first got into trading and you were like, wow, I can win only half of my trades and make it big. 5 out of 10, 3-to-1 R equals 20%. Okay. You're like, wow, I don't have to be a genius to trade. I could lose half of my trades and still be profitable. This stuff sounds easy, bro. And then all of a sudden you forgot about that whole thing. You forgot that you were allowed from the time that you learned that you could lose half of your trades and still be profitable to you actually losing that trade. You totally forgot what you were doing. You forgot. You're like, I need that loss back. They just took my money. That is instinctual. That's the hard work that you got to do right there. That little piece of you being pissed off at the markets and trying to revenge trade and get that loss back. That is where you're blowing it. instinct kicks in. The men in here, we've got it the worst. Okay. Take it from me. We've got it the worst, especially if you're a hothead or a snapcase. Yeah, that's going to be totally detrimental to everything that you stand for because you want to be profitable, obviously, right? But once you lose a trade, all of a sudden the chemicals kick in, okay? And you enter fight or flight mode and you're ready to freaking freak out. Trust me, bro, I know exactly where you're at. This is the hard work you got to do. You have to control yourself, not just patience to wait for the model. You guys have seen me take executions and price just boom in my favor, gone. By the time I can even upload you the video, it's already running to my targets. There's another demon sitting at your take profit. Looks like he's messing with the candlesticks. It's looking like he's got like a cattle prod and he's pushing down the candlestick from where your take profit is. This is going to induce a bunch of anxiety into you. Is it going to hit my take profit? Is it going to go beyond it? Should I take some? Will it be enough? All these things are going to fly through your mind. And all you got to do is stick to the plan, bro. Conditions met. Entry decided. Stop loss decided. Targets decided. Click, boom, you're in a trade. Leave your computer, leave your cell phone, don't look at it, walk away for 2 minutes. The moment you enter a trade, I want you to ditch your setup for 2 minutes. Timer. Don't look at it. Why? Because it doesn't matter. Your model over time will provide you the financial stability that you seek. Win or lose. You see this right here? 5 out of 10 wins, 3-to-1 risk per reward equals 20% over 10 trades. Some of you guys are taking 10 trades in 5 minutes. Don't do that. Okay. You're looking for the most choice beauty, especially not on CPI, not on non-farm, not during FOMC. That's what the loser gambler traders do who just suck so hard and they don't even know what they're ever doing. Okay. And I'm not talking about, getting in there and scalping a couple flags. Like I'm talking about people who are like professionals. What do you think NFP stands for? Non-farm payroll? Not for professionals. Professionals don't even go in a non-farm or the Thursday before non-farm. Y'all don't even know what non-farm is, but I'm going to teach you. It's okay. For the first week of every single month, agriculture reports come in. Okay. Everything but farms, non-farm. First Friday of every month. The Thursday before this Friday, you do not trade. You do not trade non-farm payroll. As a matter of fact, the first week of the month by Wednesday, you don't trade after New York AM session. You're done. You're done for the week. You take the rest of the week off. Now, the worst thing that could possibly happen to you from here is your ego tell me that I don't know what I'm talking about and for you to win a trade those 2 days. That's the worst thing that can happen to you. Because you're just going to be like, Master Friend doesn't know what he's talking about. I'm the greatest trader ever. I just nailed non-farm, baby. Yeah, let's see how that works for you. Can you do it consistently? Let's see how that works for you next time. You will see at 8:30 a.m. a spike up, a spike down, chop around, and then rip in one direction and then rip in the other, or just freaking launch thousands of dollars, whether it's in your favor or not. And a lot of you guys don't rock stop losses. Like I'm not trying to be a controlling dude. I'm just trying to tell you, these are the days you don't have a high probability of winning your trades. And that's what professionals do. We want high probability. We don't want anything that just shows up anywhere, right? So 5 out of 10 trades, 3-to-1 risk reward, and you will make 20%. What's wrong with making 20% over, let's say, 4 weeks? You take 10 trades in 4 weeks and you're up 20%. But master friend, my account's only $2,000. That's what you get for being a trader in the kiddie pool. I know it sounds harsh, but that's what the exchanges are. They're literally the kiddie pool of trading. They just gouge you with fees. And you've seen this blowfin and weeks and mechs being stupid and everybody getting robbed and people getting hacked and, oh, we're insolvent. You have put yourself to so much risk. The real crypto's in DeFi. The real money's in long-term speculative investing, like what Sam does. That's where the real money in crypto is. If you are trying to make a living day trading alts, good luck, especially with your experience. And I'm not being rude, I'm just being factual. Alts are like the most scammy day trading things ever. And it's for no other reason than shrimp or pump and dump groups can come and walk all over your setup. But shrimps and pump and dump groups ain't touching Bitcoin. You can actually trust this asset. And that's why I use it as a medium to teach in the crypto space, is because there's so much, there's so many big players in it that it's pretty much highly controlled and manipulated, and you can trust your setups. You can't trust your setups in altcoins. Sure, they bang sometimes. I'm not saying they don't. My APT trade ripped. My freaking Hex trade's ripping. My freaking all sorts of trades are ripping right now. But I haven't posted those like months ago. Like months ago. I don't do alts. Sammy's not even doing alts very much right now. Like you can find something, but you're trying to make money here, right? So back to this risk reward thing. When you go into your back testing skills and you start going, okay, well, I've back tested. Let's say you wanted to play. Let's say you wanted to play a flag after a stop hunt. So you stop hunt, then you break out to the upside, and then you're looking for a flag. This is one of the most easiest things, is because Sam plays it all the time, and it's one of the most simplest things to spot. Sometimes you will get continuation, and that's fine. You're allowed to lose trades. Remember, 5 out of 10, you're permitted to lose trades, so that's okay. But when you go back test your model and you're going, okay, this one won 7 out of 10 times, this one won 5 out of 10 times with a 3-to-1 R, right? You're going to need to let that trade play out. This is where you're blowing it. If you don't let that trade play out and you're panicking that trade, you got to remember that your model pays you over time, regardless of the outcome. So when you lose or win a trade, the first question you ask yourself is, did I follow the model? If you did, win or lose, you can pat yourself on the back. When my students report to me their trades and they're like, I'm sorry, I was disappointing today, I blah, blah, blah. I'm like, they show me where their executions were. Their little arrows perfectly right where you want them to be, but the trade walked on them. I'm like, wow, you did so good today. Good job, buddy. You'll get it back, blah, blah. They're like confused. They're looking at me like I just fell from space. And I'm like, what? They're like, what do you mean, good job? I lost. You lost and then you walked away. That's professional trading. Write that down. When you lose, you walk away. If you can successfully walk away after a loss and wait for the next setup, you have hit pro status trader. I'm telling you right now, it's impossible for you to lose trading over time with a model. It's statistically impossible. Like, I'm not joking you. I'm not trying to put sugar on your toast. If you follow a model, it is impossible for you to be a losing trader. So why can't these 90% of people who try trading, what are they doing? Well, they don't follow a model. They don't have risk management in check. They don't back test. They don't forward test. They don't study. They just jump into the markets with money and then leave. So now they've become a statistic. Very important that you have a model and you stick to it. Win or lose. Now, I'm not saying don't pay yourself. Okay. I always preach paying yourself. Even if you don't make the full 3-to-1 R, who cares? If you make anything, you are doing better than 90% of people who are in these markets. Here's another one for you. If you don't pay yourself, you have just told yourself as your own boss and employee that you are not worth, that your experience is not worth paying. That's what you're telling yourself when you just try to hold for full pull and you don't pay yourself. That's what you say to yourself. You're not worth it. I know you're worth it. You know you're worth it. You have some experience. And again, today after, you have no excuses. Every person, I'm looking at all the names in here. Every person in here, I'm going to be stalking. And I want to see your charts. I want to see you happy. I want to see you in your demos. No more, oh my gosh, I lost thousands of dollars. My account's down. Look at my gross P&L. What really impresses me is my model walked on me today, and I'm going to wait till tomorrow for the next one. I don't care if you made $1,000. I don't care if you made 100 grand. If you made $1 million, whoop-de-doo, lend me 20 bucks. But if you can if you can lose and walk away, now you've got my attention. Now I'm like, wow, that person is doing hard work, because it's way easier to cave into your impulses and want to revenge trade than it is to just walk away. And trust me, I'm not none of this stuff I am, void of. I have had to do the most hardest work ever. I had beating the crap out of myself, you guys. I literally at one point I had to lose it on myself. I was just like, I was in my car, I was by myself, and I literally snapped out. And it was about 15 months ago or so. And ever since then, I was like, okay, because about 2 years ago, I made enough money to buy an island or a small city. And then I lost it all. And it was devastating. Like, I'm still butthurt. but you don't have to do that, okay? So paying yourself, you are worth it. Even if you are very inexperienced in the markets, you're still worth something, right? You're worth the skill refining when you're new. That's what you're worth. If you don't have skills, you're not making money. Nobody's coming in here. I just told you, I had a windfall gain. I ran up gold. If gold was flipping out, I was long on it. And then I was hopped up on euphoria and goofballs and risked way too much and gave it all back. So, being content and knowing what you're doing and paying yourself, and then procuring, we're going to get into that, procuring it, but take it from me. Okay. Windfall gains aren't going to make you rich, because you're not going to be content with that. It's not going to be enough. You can win $1 million and then you can lose it all. It's not even about winning. You can earn $1 million and then give it all back in a second, because you don't know how to procure your earnings. Okay. It's just like any other business. You got to procure your earnings. You got costs, right? So when you're doing your back and forward testing, you have to let your trade play out. Okay. Again, I'm not saying don't pay yourself. Don't always hold till full pull, because you might not get it. It might be obvious to you, but it might save it for later. Okay. It might want to generate some more shorts before running them out, which was the case in this setup. But if you pay yourself and it doesn't, so this little piece of price, okay, again, not hindsight, not cherry picked, all called out long before it was even printed. Bragging rights aside, when you're doing your model, of course, pay yourself. But if you're in a long off a discount, you must look at your double top for an exit. Okay, not just this one up here. This one's great. This is where your greed is going to kick in, and you got to balance contentment with greed. Okay, so if you're in off this flag here and your stop loss is right there, well, why, master friend, didn't it run out that low before going up? Because it had already run out this low here. That's what that red line was right here. It already did its job. This is a protected low until we grab liquidity. So when you're in a long, always, this is not a rule that you break. You pay yourself at double top. If you're in a long and you run out of double top, you are selling into these buy stops because these are shorts here. Okay, these are short players. They're short in the market, targeting that low. Stop loss is right here. Boom. They're buying their position at a loss to close it, and we are selling it to them. So we buy low, sell high. Now, it didn't reach terminus. That's totally cool. You're paid. Who cares? Stop loss at entry. You have a secured position now. If you paid yourself and you move your stop loss up to entry, that's not a break-even trade. That is a secured position. You've taken money out. You've secured your position. You've told yourself, I'm worth this much money today, and I'm going to pay myself. Boom, it runs out your stop. You sit and you do nothing. You don't chase this short. You don't flip it short. There's no model for you to get in here. The double top was gone. You do not chase this, but you anticipate what? A reversal, right? We don't do selling and buying pressure here. Not with me. Okay, I know Sam still uses it as a, I don't know, not a derogatory term, but he still says bears and bulls. And I mean, you're the same people. You know, I'm going to prove it to you right now. Michael Saylor buys the top of Bitcoin with leverage. What did Bitcoin do? It dove for his liquidity price. He had to liquidate assets to add to his position so that he didn't have a liquidation price. So what does that tell you about buying pressure? A whale billionaire bought Bitcoin at the top and it turned on a dime in his face and he got everyone wrecked with him. So what does that tell you about buying pressure? There's something in these markets going on here. Some of you guys have seen it. You've felt it. You can sense it. Something weird going on here that nobody's talking about. If buying and pressure selling helps you, fine. Call it buying pressure, okay? Check this out. After all these stop losses, sell positions are bought, there's your buying pressure. If that helps you, use it. Ooh, look at that. Ooh, she's moving. She moving. Bitcoin's in it when it's in attitude mode. Even for myself, I don't have a good edge, and I'll take a little minute here and show you exactly what I mean. I was in this exact low, and I know it sounds like awesome sauce, but it's not. Okay, I had entries laddered throughout this discount here. So that was the 618 perfectly. Then I had more entries, bigger entries for the 786. It binked my smallest entry and took off. My goodness, was I ever butthurt. And for 240 days, I held that position, waiting for another discount retracement to add to the trade. It never happened. So when Bitcoin's in attitude mode, it doesn't have to come for a deep retracement. I know everybody wants it. I know it. I can see it. It's on Twitter. Everybody's going, it's up at 70,000 now. It just made an all-time high. I missed the boat when Sammy called the bottom. Dang it. And now we're all waiting for that discount. Bitcoin's just got that attitude, you guys. It might not do it. It might flip out here this week and never come back. Right? Looking like this right here, actually, as a matter of fact. All right, so this one came up, hit this all-time high over here somewhere, right there, right? Hits that all-time high, starts dangling around for a bit, comes down for a discount right there. See, boop. That's kind of what I'm looking for right here. Something like that. Anywho, that's why Sam has spent so much time with this asset that he's got it locked in. So again, if him and I are in disagreement on overall direction, don't listen to me. He's got this thing cased. But as far as reversals go and finding bottoms, that's just my thing. So, you know, if I'm long, I heed when he calls short. And if if we're in a discount, I'm sure he definitely heeds what I say. But we definitely make a good tag team. Anywho, back to models and it winning or playing it win or lose. Okay, so this one, let's just say for example's sake, it didn't come up to this double top. Okay, let's say that you were looking at this as the breakout flag. Okay, and if this was your model and you weren't along and your stop loss is right here because you're like, okay, well, if we lose that swing low, it's likely going to fail. And we were targeting, let's say, this high here, right there. You got a 3.25 to 1R. Very good. Boom. It just walks. Like it doesn't even give an opportunity. You bought the down close candle at the bottom of the flag. It looked like it was going to do something for a second and then boom, it just falls. This can feel like poop. Okay. Don't let it. Don't let the markets punk you straight up. Don't let them induce euphoria. Don't let them induce negativity of any kind into you because that's what they're designed to do. These markets, believe it or not, capitalize on emotions. That's what they do. Okay. If it wasn't true, then 90% of people wouldn't lose. And that's not traders, it's people. 90% of people who come into this lose because they just don't want to submit to what it is. Anywho, look at this bull flag here. All right. A nice. Remember, I told you that any trade that I take, the conditions must have a stop hunt. Well, there's a low there. There's a low there. And it stops them. Now, in the smaller time frames, that's a beautiful bull flag. Okay. So you got your stop hunt, your bull flag here, and then it just, here, we'll go to the 15-minute chart and you see exactly what I'm talking about. So there was my bottom call, turtle soup long, market structure shift, discount retracement, another shift, discount retracement. We caught that too. Come up. Look at this. Look at this double top right here. Does that not look like it's going to absolutely tank price? But we're in a discount. Remember that double top at the very top up there? It worked out nice because we were in a premium. Well, look, now we're in a discount in this double top. Sure, it did do something. I'll give it that. But once these stop losses in the longs were rated, look at this bull flag. Look at this cup. Look at this handle. Look at this weird looking bull flag here that stopped out first. Actually, as a matter of fact, that was the Trump news right there. That was the Trump news right there. That shot it to liquidity. Market makers love to use these news drivers and news events for wiping out liquidity in the markets. I mean, don't take my word for it. Go and study it. When stuff happens on a weekend, things can get real weird. Anywho, point being, double top, cup and handle here. Right now, you got kind of an ascending triangle here. Why does Sam love the ascender and the descender so much? He didn't know this until I pointed it out that the equal highs here that create the top of your ascending triangle, traders see as resistance. So there's liquidity there. So price is likely going to want to run out. Why do you think he uses Bookmap? Because he's hunting people's liquidity. That's the secret. That's the lifeblood of these markets. So your model ended up failing here, let's just say, and then ended up banging here. So you lost 1R here, and then you gained 3R here, up total 2R. Now, if that confused anybody, it's just your reward versus your risk. So if I risked $1 to make 3 off of this flag and it lost, I'm down $1. But then my cup and handle flag here, right? Stop hunt, discount retracement, break in structure right here. There's the flag. Or let's say you were playing this ascending triangle, right? Whatever. There's your flag. Okay, so let's just do this. But there, it breaks out, comes down. There's your flag right there. It looks a little messy, sure, but still doing its thing. So now you're up $3 minus the $1 you lost here. Now you're up $2. I know it doesn't sound like a lot, but if you were playing like, $1,000 account, your risk would be 10 bucks, and then you'd be making 30 bucks. But you lost 10 bucks on the last one. So now you're really only up 20 bucks. I know it doesn't seem like a lot of money, especially if you're rocking a humble account. I don't know what to say. It's just trading. If you're in this for longevity and you're in it for the long haul, some of you do have a substantial amount of money. I wouldn't put that much money in an exchange personally. You do you. But if you're starting just with humble beginnings, expect to have a 5-year plan. Don't think that you're going to make millions of dollars off of $1,000, 2,000, 5 grand, 10 grand over the course of a couple of months. It's just not going to happen. But if you've got longevity and you've got a 5-year plan, you're going to do well here. Very well. I promise you guys, submit to how long it's going to take you as an individual to get trading. Okay. So let's go into some intraday stuff. Okay. So my whole point is you could be up 20% on your account, losing 5 of your trades with a 3-to-1 R. Now, that's not to say you're going to hold for full pull. However, some of those, like this flag here, it's just going to freak out. It already made 3-to-1 R, right? Let's say you got in on this. Well, that was the Trump news. Let's go on this one, this beauty little flag here, okay? And we were targeting, just for example, this double top here, because that's what I teach you. Target double tops, use that as your stop loss there. Come on, little buddy, right there. And so this is a 9-to-1 R, and it ended up playing out very beautifully. So now you've made, your 3-to-1 R was met. That's your standard. But if you leave a runner, which is just a piece of your trade still on, then that would have ended up banking and offering a lot more for you just because it's continuation, right? It would have offered a lot more for you, and you would have had, what is that? So, well, you would have had to use some leverage, but no, excuse me, here we go. There we go, 12%. So it's offered 12% of your runner that you would have left after your 3-to-1 R and closing that. Okay, so it's really, really important that you understand risk management. There's also another piece to that nobody talks about, and it's money management. Okay. This piece is more for the people with really big accounts. It's for everybody. But when you're using a substantial amount of money, you guys, when you lose a trade and you're risking 1%, your next trade must be 0.5%. If you lose that trade, your next trade must be 0.25% risk. If you lose that trade, you drop to the lowest percent, I would say 0.10. Okay. And you do not, or you're 0.25, so 0.10, yeah. And do not turn your risk back up until you've made back 50% of your previous loss. Okay. I do have a screenshot of a chart, and if I can find it, I'm sure Love Learning has it somewhere. If you got that, Love Learning, send it over, where the risk management chart that I made for you students there. What it looks like. So you can actually soften your equity curve by dialing back your risk. Okay, you can have these you want your equity curve to have, nice stair steps, soft plateaus of, you think you're going to win every trade, but I'm telling you, you're going to go on a losing streak sometimes. You do 8 trades loss in a row, risking 1%, you've lost 8% of your portfolio. However, if you turn it in half every time and you lose 8 trades, you've actually only lost 2% of your account instead of 8%. Do you see what I'm saying? I'll either make another one. I'm sure Love Learning will be able to find it. She's always got my stuff on, within arm's reach. But if you go on a losing streak, and this is what you want your equity curve to look like, and you guys have seen mine in my funded accounts, they look just like this. Small losses, big wins. Small losses, big wins. Some of them are a little bit bigger. You can lose 2 days in a row. That's fine. But as long as your equity curve doesn't look like this, okay? This is the equity curve of a guy who blows out his accounts all the time, okay? If you go into your equity curve, if it looks like this, you're going to blow out. You're on your way to blowing out. Okay, you must have that equity curve nice. And by dialing your risk in half every loss, yeah, Love Learning's got it up. She'll bust it out. Awesome. Thank you very much, Love Learning. Appreciate you. Softening the plateau by dialing your risk in half. Okay. And this will help you stay in the game. Now, let's say you have a $5,000 account and you're like, yes, I'm gonna be professional. I'm gonna risk 1% per trade. That means I have 100 losses in a row till I blow it. I'm gonna follow a model. I'm gonna be a good boy or girl, and everything's going to be peachy keen. I got $5,000. Okay. Now let's say you lose 2,500 of that $5,000. So you've lost half of your account equity. Now you're panicking. Now you're like, oh my goodness, how did I get here? I lost. Oh, I know I was kind of clicking and over trading a bit. Now you're down another $500 because you're upset and you're frustrated. You didn't take your break. You didn't walk away. Right? Now you only have $2,000 left of that $5,000 account. Now you're panicking. You might have an equity curve, or sorry, an equity of $5,000. But your mental capital is not near close to half of that. If you lose 40% of your account, you are panicking. So you don't have a capital size of $5,000. You have a capital size of $2,000. And by having this mentality, you're helping yourself stay in a mental strength state of mind, a mentally strong state of mind, because you're going to take your account serious, more serious. You don't want to lose $2,000. Now that I've said it this way, you don't want to lose $2,000 into $5,000. You don't even want to lose 500 of that $5,000 because you don't want to dip into your mental capital. That's right where your brain needs to be. You want to grow your capital, not be giving money. I teach my students to be greedy. Okay. And greedy means you're taking, take. Give me, mine. That's greed. You holding for unrealistic targets and not having any clue where price is going, that's not greed. That's inexperience. There's a big difference between being greedy and being inexperienced. Some people call inexperience greed. Sure, it does classify, and you could argue that it is greed. But the way I see greed in these markets, give me. That's mine. We are going to war in here. That's what I view this as. We're going to war. There is people battling for everybody's money in here, and I'm going to come out on top. Right? So back to your capital size, you want to be growing that sucker. So you want to take the most choice setups. And now that we're in the 15-minute, we're going to jump into some choice setups. I'm going to turn on my day separator, and I know you guys love your indicators, so I'm going to turn them all on just for you. That's about it. Don't worry too much about my magical indicator here. It's not, don't let it entice you. Yeah, I just like to have the sessions and the days separated so I don't have to plot all those lines on my chart one by one. All right, so let's go through this guy here. So when I started posting, yeah, that's the point of control. Okay. When I started posting longs and everything just started working out in my favor. And I know it looks really cool, guys. No indicators on my charts. All right. Don't let it entice you. Okay. I know how to read these moving averages and all this stuff in the candlesticks. All right. I don't need an indicator to tell me we're oversold. It's obvious. We're oversold. Okay. So let's go to the 5-minute. I don't want to see anybody in a less than a 5-minute time frame. It's unnecessary. You don't need it. TA is not as cool as you think it is. Okay, it's just for pinpointing entries. You can actually just make money by buying red candles and holding for green ones because Bitcoin only goes up. Prove me wrong. Go into the monthly chart. Go show me where Bitcoin hits a downtrend. It never happened. It's only been up. It's had correction retracements, what that in the monthly time frame that people call bear markets, but that's not a downtrend. It never broke trend since the beginning of Bitcoin. It's only went up. So that being said, we want to be buying dips, and all you have to do is buy down close candles, you guys. Monthly, weekly, daily. If they close red, you buy them. Sam does it all the time. You watch him. DCA, he buys red. Why do you think this guy looks like such a Jedi? That's all he does is buy red, price goes up. Did he need any sort of technical analysis for that? To just buy and hold? No. But we want to pinpoint where we want to get in and get out on an intraday basis. So this is kind of an amplified lecture for what Sam teaches. Okay, this is his lifer system. Now, here's his 9-point checklist right here. You've got a bullish pattern, cup and handle. You're oversold, MACD above, curving. We've got RSI oversold, so sorry, stochastic. Okay, we've got the RSI below the 50. This matches his 9-point checklist to the T. Okay, 200 SMA is the outlier. There's your discount dip right there. You're not buying that. You're not going, okay, it's just going to rip and go over there. No, we buy red here. That's what we do. I'm training you. Okay. So you look for your little flag. Remember, you guys want high probability setups, reverse on stop hunts. Okay. Stop looking at the markets as bearish and bullish pressure. Okay. Look at it more as where's people's liquidity. Okay, that's what we hunt here. That's the whole lifeblood of price moving to places is people's stop losses. Don't take my word for it. Go and study. So you got this weird looking bull flag. Where can you pull the pole from? Okay, well, we'll pull it from there. Okay, so you got a retest of the 100. Now, just so you know, the green moving average is my 9. And the red moving average is my 21. I like it a little more sensitive than Sam does. Okay. So price comes down to the 100, snaps off of it. Boom. Look at that. So you got a little baby stop hunt in here and then a little baby bull flag in here. That's above midnight open. So we'll just exclude that for now. But look at how it makes this bull flag right at the 200 SMA right here. Okay. And now you've got the 9 and the 21 cupping price. This is Sam's go-to. Look at how it snaps up above the 200 and bang, target acquired. Okay. So when this is dumping, you're not looking for bearish continuation. Okay. You're looking for a reversal, especially in the PM session. And there's a little more to it, but you don't need it all. You're just looking for specific conditions that are met. You got tight moving averages, 200 above. Where's the pool liquidity? Well, there's one, and there's a sneaky little one right there. That's a swing high. I'll teach you swing highs and swing lows in a minute, and that will make more sense, but either way. So Friday was beauty, and that was that bottom call right there. So, baby. Oh, yeah, I'm just tutoring some 99ers here, and I'll be out in a bit. You can go ahead, yeah. We're not. Let me. Okay, so boom, very good, very good. All is good. Now we're gonna go Saturday. It's just whatever. Saturdays are just whatever. Sure, it moved this Sunday. Sure, it moved this Saturday and Sunday, but I don't want to train you guys to be trading in there. Okay. So this was our discount 786 touch here from that low to that high. So now we've got an obvious stop hunt, right? So now let's see, where does this thing want to go? Well, we've got tight moving averages here. We're SR flipping. We've got a bull flag, touch of the purple line, the 100. Look at this right here. Zoom in. Look at that right there. Okay, bull flag here, touches the 21 SMA, and look at the 9 cup that sucker. And she just starts ripping. I know it looks great in hindsight, okay? But that's how you practice. This is how I practice. This is how doctors practice. This is how flight people practice in hindsight and video games. Okay, so that one ran to the double top very nicely, traded down first, did our little bull flaggy poo, and then ripped. Now, this was for London liquidity run. Um, the London run, I don't like to see that in London, but you guys that trade London, that was a very, very, very pristine setup. Okay. So that was actually the Judas swing for the day. It looked like it was going to rip. And then you got this bull flag now in a premium market, what turned into this bear flag. This was one of the most sketchy Mondays I've seen in a long time. But bang, comes down, hits the 786 retracement from there to there, comes down, bang, stop hunts. Now let's find a little bull flag cup and handle thing. And it's Monday. It's the end of the day. Don't expect much after 4 p.m. Okay. There could be a little grand finale, but don't expect much after 4 p.m. period, especially on Monday. So sketchy day, but still something in there. Okay. Remember what I said about breaking out, right? And you being a breakout trader and momentum trading. How did that work out here? Now, what would have happened if you would have flipped short on this breakout? Please go and study this. I will help you trade backwards from what you were doing, but you got to follow the rules. First rule is get in a paper trader. If you're trading live funds, I'm not going to give you financial advice. That's the difference. Okay. I will give you educational advice for practicing, but I can't. I'm not giving you financial advice. I'm not going to tell you when to buy or sell. It's not going to happen. Okay. If you want to stalk me in my trades and you take them, sure, you'll probably work out. But now that you have had a session with me, don't over position my trades. I lose trades and I'm okay with that. Okay. But if you over position me and my trade fails, guess what? You're going to be very upset with me and you're probably not going to want to learn from me anymore by your own doing. If everybody here was to take Sam's setups and apply risk management and they played every single chart that Sam put out, you'd be up huge. He'd be up huge. But Sam doesn't even put out take every single chart, and neither do the elite. It's all about recognition of your model, which is theirs is the cup and handle. Sam's got a couple new models now, which is sweet. So this day, really ugly. Okay. I wouldn't consider Wednesday a trading day for me personally. There was no significant stop hunt at the times I wanted to see. London made this move. I hate when London makes the move. This Wednesday, just there's simply no trade. Some of you guys, you're going, every day is a trading day. No, 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 no. Day trading is not everyday trading, regardless of who told you what. So here we've got a stop hunt, boom, to the upside, right? Come and take that little whiskey poo there, that guy there. Everybody's long in the breakout. You are smarter than that, so you'll hit short once it tags this high because you know that breakout trades aren't doing you any good, and you'll practice that. So now you've got my money printer model. You got a break in market structure, boom, takes out a swing low. Great, bear flag, boom, boom, bear flag, boom. Why did these bear flags work out so good? Because it stopped hunting to the upside first. Okay, now we've got this, and we've got this Friday here. So bang, little stop hunty poo here. Now look at this. Rips up. Where is the flag? Right there. Right there. Right there. Another one right here. Didn't give much more juice. And then that was the top of the day. Probably bearish divergence. There it is. And then it dumps for a discount. This Friday, pretty lethargic. Didn't really do much. Then we got Saturday. That was the Trump. Sunday, just kept ripping. I'm not teaching you how to play those days. Study them. I do everything backwards on Saturday and Sunday than I do on the weeks. Or I sit it out. So Monday, you got opening price, trades down, does a stop hunt, bang, perfect. Perfect. Why is that perfect? Because it traded down first. I'm bullish on the market. So I wanted to dip. That's what we do. We buy dips. You're bullish, you buy dips. It's not that hard. So now you got this inverted head and shoulder right there. Real deep discount. Looking like it's going to look at how I want you to take a look at this candle and admit to yourself, Would I have chased that candle? Probably. But me, I'm going to buy that candle. Why? Because it's red. I'm bullish. It's in a discount. And I'm going to be a buyer here. Okay. Then it finally snaps out again. Another bull flag, retested the 21, not convincing that it's going to rip up yet. Um, you know, you can look in here for yourself and find what you want to see in here as far as, confluence. I just simply don't use them, but I will tell you this. When the MACD is above the 0 line, you're in an uptrend. Okay, that's bull country. Even if the stochastic comes and resets and the MACD is still in bull country, that's the stochastic resetting. While the MACD is in bull country, I'm considering the 50 line of the RSI to be extremely oversold. As you can clearly see, oversold, 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 oversold. While the MACD stays in bull country, while the stochastic bottoms out, and then it bottoms out, it rips up even more, bottoms out, rips up even more. So while you guys are longing these breakouts and not buying these dips, you're missing the boat, period. Okay, so if the MACD is still in bull country above the 0 line and the RSI becomes lower than the 50 line, the midway point, that is extremely oversold for me. Do I need a indicator to tell me that this is oversold? Boom, 786, perfectly. Retested the purple line. It's time for price to run. Leaves the double top, a little bit of jubbly here, but look at ascending triangle. There's Sam's model right there. Boom. And what does it do? Well, it just snaps out of control. That's what it does. Now, why would it do that? This is resistance. Trust me, bro. Right? This is resistance. Look at the selling pressure. Look at that retest of the purple line again. The 9 curving up, scooping up price action, and then snapping out of control. Okay, and then we had Tuesday where it opens up, trades down first, just like Monday. Opens up, trades down first, tricks traders into going short. If that's you, stop it, because we're going to reverse on these suckers. Now let's see how that worked out. So we've got this break in market structure here, retracement into a discount. Look at that swing low right there. Boop. Taken. Bull flag. Right there. There's the little tight moving averages. 200 right there. Look at when it gets above the 200. Boom. Where does it go, though? Did it go to anywhere just random? Well, there's a double top. It just magically just went there and binked everyone before making another bull flag. Equal highs here. Another discount. Tricks traders into going short. Boom. Wrecked. And that's the end of the day. Wednesday, Wednesdays are kind of hit or miss. You're lame. And, we were aiming for this double bottom. We did get it. Then we aimed for the double top. We did get it. Everything worked out according to plan. But I want to show you what happened here. From Tuesday's low to Tuesday's high, where do you think price came down to? Anywhere random? Boop. And then we longed. And then price ripped. So, there's your stop hunt. There's your break in market structure, inverted head and shoulder. There's your cup and handle, kind of an ascending triangle, a little wonky. Equal highs, that double top right there, total bait. Where's your bull flag? Where's your model in here? That's what you want to find, right? So there's a rising wedge in a discount, a bear pattern failing. Imagine that. High probability that your bear flags are going to fail in a discount environment. That's where you get your parabolic moves. Why is that parabolic? Because everybody's playing the bear flag. That's textbook. Everybody's in it. Boom. It just runs out liquidity. That's all it does ever. It just every day is Fall Smooth Monday, you guys. Okay, so risk management, applying your model, and the patience to wait for it. These are the things that I want to see you guys putting your hard work into. You already know flags. You pretty much already know divergences. One of the biggest things that you're not considering in your trading career is submitting to time. Submitting to the time it's going to take you to learn this. Everybody's going to be different. You all have different jobs, different scenarios, different peoples in your lives affecting you. Don't give up. Don't ever, ever give up. As long as you feel in your heart that you are doing the right thing, which is practicing a model, getting down with risk management. If you are doing those hardworking things, don't ever give up. Okay. If you are really making a conscious effort to hone in on your self-control, don't give up. It might feel like you're spinning your wheels and you're not getting anywhere, and it's normal for you to feel like that. It's also normal for you to make money when the markets are easing, for you to feel suicidal when the markets are not moving very nicely, like the last little while. Okay, this is where controlling your losses comes in. How many times you trade per day? For me personally, I give myself 4 bullets to catch my model. Three is like way too much already, but I will allow for that. Let's say between 7 and 11 a.m., I spend 3 times trying to catch my money printer. And then after 4 p.m., it just keeps tanking. Well, I will give myself that last shot because I know at 8 p.m. EST, that candle has to close. I also know that every single daily candle has a bottom, and that's not up for discussion. You can't argue it. That's a fact. Every daily candle has a bottom. So when time is running out and it's 5 p.m. EST and it's still dumping, I have the highest probability to catch that daily bottom between 4 and 8 p.m. It's going to materialize. It's going to be my money printer model. Some of them might look ugly and it might not come down to a 786. Admittedly, it could just V-shape recovery and take off. Okay, I'm not saying that it's perfect every time, but if you're dumping after 6 p.m., your chances of catching that daily bottom and the ride back up for the next daily candle, holy moly. Study this. Time runs candlesticks. If they didn't, we wouldn't have a little clock. They wouldn't close every hour. We wouldn't have a little time thing up here if time wasn't important. Okay. Now I'm going to get rid of this because it's just way too much for me. I never use volume. I'm not even going to get into it. Volume just bugs me out. But so let's go into the 15-minute chart for a little bit here. Okay, and now that we've got the indicators off and we're able to see correctly. Look at that. Totally random, right? Not really, but that's the kind of stuff you stop hunt. When I see a double bottom above a 786, man, I am putting the farm on that one. Bang. Retracement, double top, another retracement. Look at this bull flag here. Ascending triangle, just a little guy here. Little tiny bull flag here, snapping up into the double top, essentially there. Very beautiful. So if I take this little piece here, turn on my extensions, where are we going? I'll leave that to your imagination. Now we're going to talk about exit strategy. One of the most important pieces of a trading plan, not talked about anywhere ever. Exit strategy. In order for you to complete your trading plan and become a professional, consistently profitable trader, you're going to need to have an exit strategy. Some of you are going to be at this level. Some of you are not going to be at this level, but it's something for you to look forward to if you are not. If you are down with a model and you've got a nice little trading plan and you have a good idea of what you're doing and you're now applying patience for that model, I want you to take your smallest monthly bill that you have. It could be your phone bill. It could be whatever it is for you. Okay. Take your smallest bill. And just for the next few months, I want you to try to achieve just that amount in profits. After you achieve that amount in profits, I want you to study and sit on the sidelines. Now, if you can't do this consecutively for 3 months, you're not going to do this with more money consecutively for the rest of your life. You see how that works? Oh, but master friend, $80 is nothing. I make that in one trade. Good. Then you just made your month's bill in one trade, and now you get to study for the rest of the month. That's what that means. How much money is it going to take for you to be content? I'll tell you this much. If you're not content with $80, you're not going to be content with 80,000. I promise you right now, 100% guaranteed. You don't respect $80, you're never going to respect $80,000. Period. Just please take it from me. So for this next little bit, work toward your smallest bill. Take that out, put it in your bank, pay your bill. Even if you don't need it, some of you guys have good money. Okay. I'm not saying that you need this to pay your bills, but this is part of a trading plan. You're conditioning yourself to paying your bills with your trading funds, right? So just start with a low-hanging fruit objective, something that you go, holy moly, I actually took that money out and paid my bill with it. Once, I remember a year ago, I was freaking out because I did it. I didn't need the money. I didn't need to take it out, but it felt great to take money out of the exchange and pay a bill with it. I think it was a car payment. And it was just awesome. Even my wife, I was like, hey, you want to pay a car payment? She's like, okay. She was proud to do it. She finally got a payout. And she finally, like, she's like, oh, she's got all this money. She doesn't know what to do with it. I was like, make a car payment, take some out. She's like, okay. It feels great. Like, trust me on that one. So you do this consecutively for a little while, right? Prove to yourself that you can do it. Not just sit to yourself and think, yeah, I can pull $80 a month out easy. Now you can't because you're not doing it right now. Okay. So your $80 is your low hanging fruit objective. Then you're back in your paper trader and you're procuring your wealth. Don't continue trading that account. Just practice your model. Therefore, the next month, the month after that one, when you do decide to turn it up, you've got all this experience under your belt. And now you will have a soaring amount of confidence for when you place your next trade. Okay, this is another thing. When you are watching your fellow students in the 99 killing it or losing it, do not compare yourself to anybody. Okay, everybody's on a different learning curve, and that's the most self-destructive thing you could possibly do is compare yourself, your career, you to anyone else's trading career or them. Okay, I see it a lot, and I just want to hug. I just want to send out big giant hugs because you don't know how long that person's been in the market. You don't even know if they lost 20 trades before they nailed that one. You don't know what's going on back there. You don't know if they got a rich daddy that's just funding their accounts for them while they lie and say, oh, I got hacked or whatever. I don't know. I'm just making stuff up because people are like that. You don't know them. All you know is you. So compare yourself to yourself from 5 months ago, from a year ago. See how far you have come compared to you, not the next person sitting next to you. Their experience is none of our business. Okay? So back to conditioning yourself to a exit strategy. Your low-hanging fruit objective allows you to pay yourself while you learn, because that's what you're here to do. You're here to learn. You're here to practice, and that's exactly what you're going to do. Okay? Don't think that you need to jump in the hot seat right away. You don't. It's not shameful to go back to a demo and practice. It's actually very honorable and admirable. And I applaud anyone who admits that their experience has proven to themselves that they're not worth paying. So they have to go and get more experience. That's not to belittle anybody. It's just a fact. If you are trading live funds before you're ready and you're losing them, that's the market telling you you're not ready for this yet. Okay. So just chill out. You got a long time. We're here for a good time. And so from here on out, those of you that are really, really new and you're just struggling and you're trying to figure out what is it that I'm missing here, it's exactly what I just told you, this whole thing. Some of this stuff is going to blow right over your head, and I'm expecting it to. But eventually, especially if you watch this a couple of times, maybe once more in a few months in the future, with a little bit more experience, you're going to go, oh my goodness. You might even realize it next friggin' week. Wow, this stuff is working. It's doing exactly what it's supposed to do. Then you discover a model. If you like the inverted head and shoulder, you can anticipate it happening after a stop hunt. Okay. If you like it doesn't matter. It doesn't matter what you like. All your beautiful lifer system models are all going to play out after a stop hunt. That I can tell you. Say this one more time for the people in the back. Stay out of the 1 minute chart. It's punking you. It's not doing you any good. It's just inducing emotions into you. I see it all the time, and it's beyond. It's not even funny anymore. Like, it's just kind of sad, to be real with you. People in isolated margin mode, death by 1,000 cuts. Look at these. Look at this. That whole week. Crazy. And this freaking Friday, Saturday, Sunday, flatlined. Monday, Tuesday, finally Wednesday gets its butt moving. Okay, so about 2 times a week, you're going to have a beautiful, beautiful setup, and everything's going to be perfect. Okay, it's not going to be every day, but Tuesday, London dumps, you're waking up, it's New York, market structure shift, retracement. Look at that beauty. Look at that beauty bull flag right there. This whole thing right here, right? Snaps up, bang, hits the equal highs here, meanders around for a bit, bigger bull channel there. Now, why did that bull channel rip so good? Because it did a stop hunt first. Okay. Stop hunt right here in the Friday, rips, takes out those equal highs there, stops randomly right there. Why? Because it does. And it's Saturday, pretty much lethargic. Sunday, there's a little bit of something in here, but still stupid. And then Monday, open, stop hunt. Look at that. Look at that beauty stop hunt right there. Bang. That's where I buy. Right there. Why would I buy there? Because there's stop losses. There's sellers there saying, take my money, master friend. And I'm like, okay. Boop. Right on schedule. Imagine that. And this is for your notebooks. For you London traders, 1 to 5 a.m., you're going to see a run on liquidity. You're going to see your model. It's going to be after a stop hunt, and it's going to run to that pool liquidity, up or down. That's for you to determine. Okay. And then from 5 a.m. to 7 a.m. is quiet time. Price does not move during these times. Do not look for a setup during these times. Okay. And then 7, it's really like 8:30, but I start at 7. So 7 a.m. to 11 a.m. is your next scheduled liquidity run. You are going to find your model after a stop hunt. I'm showing it to you right now. And that is my money printer model, right on schedule, 7 to 11 a.m. Now, this can last up to 6 p.m. Can. Okay, that doesn't mean it has to. That's why you always pay yourself. Okay, so here we go, 430, 536. And this one didn't quite give a lot, but then Asia come in, and she gave the next gusto. Now, Asia does have a liquidity run. It's not very cool. A lot of the times, about 80 to 95% of the time, Asia does nothing. Okay. Now it is between 7 and midnight. Okay. Do not count on this. Go into your charts, go look at 7 p.m. to midnight, and you will see that price typically doesn't move during these times. Okay. That's not to say it cannot, it's just typical. So Tuesday being just an absolute dork. No real movement in Tuesday except for the PM session here. Look at that, 6 p.m. right on schedule. Bang. If price doesn't do this, if price does this for the day, you could look for a trade at the end of the day. But I mean, if it typically after 11 a.m., I'm not hunting for another setup, you guys. I want this move here, and that's all I want. Whatever price does the rest of the day, I could care less. I want the 7 to 11 a.m. run on liquidity. It's what we call rush hour. And I mean, don't take my word for it. Go and see for yourself. This happens every day. Sometimes it doesn't happen. Okay. You'd be like, oh, look at that Tuesday. It didn't happen. Okay. Well, there is 7 a.m. It ran into liquidity and then it ran into that pool of liquidity. So, yes, the liquidity run on schedule happened. It just was not in a range that we like to see. Okay. So 7 to 11 a.m., you're going to get a run. You don't got to be a genius to trade these times. It's a sustained price. Would you rather be in the markets during a sustained price run? Or would you rather be in the markets when you might get a run? That's not that's not a hard decision. But I can pretty much eliminate 90% of all your losses right now. You trade 7 to 11 a.m., you can let your trade run till 6 p.m., but after 11 a.m., you're done hunting. That's it. Okay, I've just literally eliminated 90% of all your losses right there by trading Asia and times you didn't know didn't move. Okay, time is it? 10:30. Boom, runs right after a stop hunt right there. Now it wasn't a deep one, granted, but still a stop hunt. There's equal lows right there. Okay, did that hit the 786? Probably. Did it leave it? Yeah. Bull flag? Yeah. Bull flag? Yeah. Bull flag? Yeah. Bull flag? Friday just did nothing. Saturday just did nothing. Sunday finally something in there. And that dump to a 786 probably. You know what I'm saying? That's why we call it the money printer. Goes Bert. So not a lot of movement in here, but still liquidity sweep here, 8:45 a.m. Look at 7 a.m. Dumps, bang, liquidity, runs out to the top liquidity, and that's it. That's it. Now I'm going to teach you right here. Okay, this is another thing for your notes. If price doesn't continue to run by 10:15 a.m., it's likely not going to run for the rest of the day. Okay, so once you get your stop hunt after 7 a.m. and price starts freaking out, if it doesn't continue after 10 a.m., look at how 11 a.m. here stops. Bang. If it doesn't continue, it's not gonna. And look at it not doing it. Okay, that's for your notes. You want to see price running by 10:15 a.m. And it hit its pool of liquidity. So here is 10, here's 10:15 right there. It was already starting to run. Okay, so there's equal highs here. Double top. Boop. And then single top. Boop. Sometimes it's all you're going to get out of the day. Okay. It's just the way it is. Saturday, don't trade it. I'm not teaching you how. There's no point. Take the weekend off. Enjoy your lives. So Monday, annoying, but we got that stop hunt to the upside. Right in schedule. What time is it? 8:30. Boop. And then bang. Retracement, bear flag. Didn't do a lot, but bear flag still played out. Should be paying yourself here. I know you see this double bottom. You know that there's sell stops in here for you to buy it. Okay. But it didn't reach it. That low right there. You must pay yourself. Okay. And of course, do you play bear flags? I don't know if that's your model, but still just showing you that it all plays out. Okay. Well, this guy here, 7:45 a.m. Boop, takes out that double bottom here, graciously, still sends it. Look at this bull flag hanging around all day, just doing nothing. But look at this guy right there. That little baby bull flag, little baby SR flip. I do put some weight on SR flips when I blend time. Okay. When it's in rush hour, I will 7 to 11 a.m. I will put some weight on there. I'm not counting on it, but there it is. Okay. So bull flag here getting stopped out. Great. 7 a.m. Where are you? 7. This one wasn't too obvious here, right? This was that Wednesday. Wasn't very obvious here. So this one is going to blow your minds right here. There's no trade. That's right. Price freaked out to the upside just when we wanted to see it, but there was no trade here. Why? Why was there no trade here, master friend? Because I didn't get a stop on. That's condition 1. Remember, candles moving do not equate to me being in a trade. If I don't see a stop hunt below the market to some degree, and there's equal lows right there, if I don't see that stop hunt, I don't have a trade. This is what I call a type 2 classic profile, where it like goes up, then retraces, and then freaks out to the upside. I call this type 2, where really I'm looking for that deep stop hunt first. And that's my type 1. Okay. So anyway, condition 1 not met. So I don't have a trade. You might find your model in here, but mine is not. So Tuesday keeps ripping, is rude. No real deep dirty stop hunt. 7 a.m. Okay, here we go. 7 right there. Bang. Look at that. Stop hunt. Bottom 1, bottom 2. It's not big. It's not deep. But does your model show up? So it snaps up, trades back down here. Can I frame a trade in here? Well, what do you know? I can. So it hits my discount retracement. There's my bull flag or your bull flag, whatever. And then boom. Wow. It plays out. Friday. It just kept ripping. And I mean, again, candlesticks moving do not equate to a trade. Now, let's say you were trying to catch the top of the week. I totally am down with that. Okay. And you're like, okay, that's a swing break. Wow, that's a retracement. Wow, that's a swing high and a discount. I just caught the bearish money printer. That's a loss. So what? You lost the trade. On a Friday, you're probably going to be butthurt all weekend if you overposition and you didn't listen to me, but you were risking 1% of your account and you lost 1%. Ooh, how will you ever recover? Right? But you can't go in there and then crank your freaking machine up to 50%. I'm just going to enter 50% of my account right now, 200x, send it. Wrecked every time. Saturday, this was so nice. Look at that. Well, what weekend is it? The second one. Of course it's going to move nice. It's the second weekend of the month. So here we go. Equal lows, stop hunted, break in market structure, flag, boom, right to liquidity after leaving that double top. My goodness, you guys study this, okay? When you're going to the upside and it leaves a double top, target it every time. And then of course Sunday doing bleh. Now look at this puppy. Open, low, high, close. Pretty simple, right? So you trade down. The stop hunt was just a little bit before 7 a.m. You can give it a little bit of time there. Okay. You can widen your threshold just a little bit. You can go from like 6 to noon if it hasn't run yet or done the thing. But look at that stop hunt. Look at this flag right there. You see that swing high right there? Right there. Broken structure, retracement, double top again. We're bullish. There's your double top again. Tricking traders into going short. What is that? An SR flip. Funny. Another one here. This one didn't give up. the gusto here, but still look at 7 a.m. stop hunts, breaks market structure. There's your little flaggy poo. There's another flaggy poo, and then you had to hold till Wednesday and booyah. A Tuesday play leaked out into Wednesday, which was kind of cool. It happens. Thursday, just lethargic. If I this is February. Oh, we're way back, yeah. So Thursday, Friday, just doing nothing. I believe that this was non-farm. No, 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 no. That was 2 weeks. That was the week before this. Excuse me. Bank was this? I don't know. Anyway, I've given it to you. Those seven here, 9:30 a.m. stop hunt, right? Break in market structure, retracement, and it goes down. So it did play out. It just wasn't in the big range that we'd like to see. Again, here, 7 a.m. at 9, stop hunt to the upside, double top here, boop, break in market structure, retracement, getting in, didn't give up the ghost till Saturday. I'm not teaching Saturdays and Sundays. There's no point in playing them. I'm going to say this until it finally clicks and I see when I, oh man, I don't even want to get into it. It's just, it's sad. It's sad. Nobody wants to listen, and people just like have Stockholm syndrome or something. They just love getting wrecked. I don't get it. You guys can make, oh yeah, I love learning. Nailed it right there. So yeah, you guys can make so much good money, right? During the week when it's high probability of sustained price runs, and then you just end up squashing yourself all weekend. There are times you will win on the weekend. I'm not denying that. Okay. Let's see here. So I am going to take this little piece of information here. Thank you so much, Love Learning. You are awesome. And I'm going to put it in the learning library right now. And we'll all take a look at this together. Okay, so that's uploaded. We'll give it a few minutes to get everybody that on everybody's screen. Okay, so Friday, just no trade. Like you could have found something, but there was no break in market structure here. So yeah, you had a stop hunt, condition one met, and then you have your break in structure. So condition two not met, so no trade. Saturday, Sunday, yuck, gross. And then, oh my goodness, what time did that happen at? If you said 7 to 11 a.m., you are a winner today. Okay, this is when your model formed here. You can leave your trade run till 6 p.m. You can leave it for the next day. You can leave it for the week because there's a chance that you could catch the weekly bottom on Monday, Tuesday, or Wednesday. Okay, boom. So 7 to 11 a.m., there's your model every day just for you. Boop. And then it continued on into the night. Tuesday, no trade, no stop hunt, no swing break, no conditions. Wednesday, no trade. Stop hunt was to the upside. Retracement was here, 7 to 11 a.m. No trade, buddy. It's just the way it is. Tuesday, no trade. Wednesday, sorry, Thursday. So this was the banking holiday here, if I remember correctly. And I might be off on that. Yeah, maybe not. Anyway, Thursday, Friday, no stop hunt, no swing break. Saturday. You guys that want to trade Saturdays, there you go. This happens 95% of the time while price does not move, or sorry, moves only 5% of the time on Saturdays. So you just please stop hurting yourself. And then so Monday we got, it just kept ripping. This was not cool. Sure, you've got to stop hunt. Do you have a break in market structure? No, not convincing. So no conditions met for a trade there. Now you've got something. Boom, stop hunt, 10 a.m. Starts running by 10 and 15. Great, looking for a model. Depending on what your model is, I would have sold short right there at this candle here. Okay, right at my midnight open and start flipping that sucker. Oh, that's my model. Okay, if you don't find a bear flag, if you don't find your shiz in here, you just don't trade it. I can't stress this enough. Candlesticks moving does not equate to a trade. Conditions must be met. You're looking for something specific. Here we go. Wednesday, no trade, no stop hunt, no swing break, no retracement. Thursday, no trade. Friday, Absolutely gross. Friday the 8th. So this is non-farm right here, 8:30 a.m. Okay, 8:30 a.m. Starts riding, stops out the shorts, stops out the longs, runs after the long, short chasers there, and then does nothing. That's non-farm. That's Thursday before non-farm. Okay, have that in your notes. First week of every month, Thursday and Friday, no goes. Okay, even Wednesday. And after New York AM open at 8:30 a.m. Yeah, my open is 8:30. I know the traditional open is 9:30. I get it. Use 9:30 then. You're done trading for the week. Does that look like anything you want to be a part of? Would you want to risk your hard-earned money that you spent years and months, weeks building? No, 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 no. That's pro status. Sitting out. You're either addicted to trading and you just can't, and you need Narcotics Anonymous, or you're gonna develop self-control. Okay, bang. Look at that. Sunday night. Stop hunt. Here's your bull flag. Boom. It's for you London traders. And so just a couple more examples here. Monday, just ripping up. I'm going to give you another one. If London makes a substantial move, I don't give a crap what New York does. Okay. Look at these 2 days back to back. I'm going to give it to you right now. If London between 1 and 5 a.m. EST, New York time, makes a substantial move into liquidity, you'll know what it looks like because it'll look like this versus this. I'm not looking for New York to do anything. This is a signature. Okay. When London does nothing like this here, now I'm looking for something. Look at this. 10 a.m. Bang. Stop hunts. Then rips down another double stop hunt. Comes back up. SR flips right here. Bull flag. And then takes off. Okay. So that's it. Back to back. London does something. New York does nothing. London does nothing. New York does something. Okay. There you go. Substantial run. Maybe. Still, Wednesday, not doing much. Tuesday, no real trade in here. Candles doing stuff doesn't equal meat for a trade. But here's your little lesson on the daily bottom. Okay, 3 p.m. here and 3:15, whatever. Still running down. We've only got a few hours left to close this candle for the day. So the candle's actual close is 8 p.m. here. I know I used midnight. It gives me a little bit of an edge. So if I was bearish on the day, there's the daily low for me just before midnight, right? Anywho, the close of the actual candle is here. So it's running out of time and it's dumping. So typically it's going to want to retrace, right? And run for the chasers. That daily candle, I guarantee 100% not up for discussion. It's going to bottom. They all do. Okay, you go into your daily chart, go and look. Is there one single candle that doesn't have a bottom? No. Do they all end at 8 p.m. EST? Yes. Therefore, you can time the markets. Stop hunt right here in London. Totally stupid. I know. New York doesn't really do much. Where'd you hear that before? Okay. Saturday does something. Not really interested. Sunday doing something. It's totally not interested at all. You got this bull flag right here. Any stop hunt after 7 a.m.? No, not really. It did kind of run up to a bearish 786 here, which is totally cool. So the stop hunt in London, swing break here. You can see that swing low, broken, retracement into a premium, bear flag, bang, bigger bear flag. I think Sam called this sucker out too. Bang. So now we're leaving this double top for later because we know that, and this is for your notes, smooth edges tend to become jagged. Okay. And then Tuesday, dirty stop hunt. Nice swing break in here. Retracement. We call this a turtle soup long. It's totally annoying. It looks like it could continue to run. You got to have mega conviction to buy that. You're not going to gravitate toward a turtle soup model right off the hop, but it's something buying people's sell stops is an acquired skill. Let's put it that way. But so swing break here, a bigger one, and then it runs out the what? The double bottom. Double bottoms to me are sketch. Sure, they could play out for a little bit, but eventually it's coming back for it. Bang. Double top here, smooth edges. Stop hunt here, become jagged here. retracement here. So 1230. Yeah, this one was a little sketchy. Not gonna lie. Some of them are. Not every day is going to be perfect, but look at this swing here that I took from here to here. 1.5 deviations, calling out the top here into our double top. Bang, bang. So now we got a quadruple top. And is it going to get wrecked? Boom! Of course it's going to get wrecked. Why wouldn't it? Okay, so I hope you guys found this one insightful. I really desire that all of you become better than you ever thought that you could ever be. And we'll want to see you make it. Now, I know you feel like you're a little bit alone in this journey, but you're not. Okay, we're all with you. And the people in the inner circle have been down the road that you're traveling. Okay. And you don't have to walk the gravel road in bare feet. Okay. You've got a nice set of boots that you go hiking with that protect your ankles. That's what the 99 is. We're your boots, your foundation. We can't walk it for you, but we can help you. But you gotta tie your boots up properly. Otherwise, the ankle supports don't work. Okay, so little lesson in swing highs and swing lows. It's not as complicated as you think. Okay, it's actually very, very, very simple. Not easy. Notice how I don't say it's easy, but it is very simple. This is all I do. This is why you see no indicators on my charts. I just literally place swings in every time frame, premium and discount, and that's all you get out of the fibs. And I don't even use the fibs anymore. That's just to frame the idea of the trade for you guys. I literally have nothing on my charts when I trade. It's just straight up, where's people's stop losses? That's all I do. So if you are in a discount environment, you are going to want to hunt your swing lows. So it's a higher low, lower low, higher low. The closure of this candle confirms that these three are a swing low. So what would you be targeting? Well, this is a very good spot to target. And I turn these red for liquidity. Okay, so you want to target the highest high of the three candles that made the swing low. Okay, now that's pay the trader. That's not terminus. That's not collapsing the trade entirely. This is just where you take your piece because as you have seen, price can freak out, right? So right here, you've got your lower low, sorry, higher low, lower low, higher low, and that was the bottom. Then you make this new dealer's range here. And you've got a higher low, lower, and if you want to pull from here, who cares? Do it. Okay, it's still in a discount. It doesn't matter if it hits the 786. You just want to swing low in the discount, right? 1, 2, 3. Where does price go? The highest high, the three of the candles. Pay yourself. Double top here. Can take a piece there if you want. Hold for whatever. But look at, boom. Nails the one deviation of this price swing here. Bang. That's, you could terminate your trade there. So that is, and if you play this and you swing traders or you working class heroes that have a high profile job and you're not able to beat in charts, I'm going to go into the monthly chart soon. And I'm going to show you that you can do this in any time frame. Okay. The higher the time frame, the better. So that is how you play a swing low. Okay. I know the books tell you that you need 5 candles. That don't listen to those guys. Okay. They're trying to get you wrecked. That's the whole goal of the books. Okay. Everybody buy my $1,000 as courses for 100 grand. Come to school, waste your life, and never find consistency. This is a swing high. It's the same as a swing low, only upside down. You've got a lower high, higher high, lower high. Played in a premium market, this will do a lot for you. So you're targeting the lowest low that the candles have made out of the 3 of the swing low. Okay, that's not terminus. That's pay the trader. Take your piece here. And again, you can leave your runner on and leave a piece for the trade because that thing might dump for you. Okay. So that's how you can scalp a swing high, a swing low. Now, how you can trade this, and we'll go to the week actually, how you can trade this in and swing trade in the weekly time frame is you're pulling your fibs, okay? We'll just use this because again, if you guys weren't here, we called this bottom like champs. Okay, it hit the 786 perfectly. It broke market structure. We were there. Those of you guys are there. You can all contest. I bought that perfectly, but it's in a discount market. So you've got a lower low with a higher low on either side, and the candle that confirmed the swing low actually already ran it out. This is so freaking annoying. I get it. It happens. Leave it alone. Don't touch it. Okay, so now we've got another dealer's range here. Master frame, why do you go to the bodies? Because the books suck, that's why. So you got your higher low, lower low, higher low. Again, another sucker. Arg. Annoying. Totally get it. Okay. This one here dropping into an absolute deep discount. So now I'll pull from the wicks. Oh my goodness. Have I been a while? Yeah. Okay. Look at these equal lows down here. And again, Breadman caught this bottom. We called this bottom. It was freaking sweet. Our little tiny little money printer was in the bottom of this weekly candlestick, and we nailed that like we were ordering pizza. So we're in our discount. We're waiting for a swing low. Not too convincing, but look at this. Higher low, lower low, higher low. This compression candle right here confirms these three candles as a swing low. Look at what the next candle does. Runs out the highest high of those three candles. Bang. Did it have to continue from here? No, but it was in attitude mode. So that swing low holding the entire time. Okay. Never broken. And then you're playing until you make a swing high. Now I collapsed my trade right here in this candle because we made a swing high and I was looking at this as resistance. It got me. So I've not only got one tiny little fill here to this candle's closure. I haven't gotten a deep discount retracement forever, and I've been waiting for it. And that's kind of what Bitcoin does. It won't give you that retracement because it's a butt nose. When it's in attitude mode, it don't get in the way. And you guys trying to short this, trying to catch. Oh, we're going to talk about that. And we go off here right away, go off the rails. But so you got another, or your swing high here, pay the trader, or collapse the trade and look for another swing low. So now you got a higher low, lower low, higher low, compression candle. Next one, expansion. Boom, runs out the highest high of the three candles. Pay the trader and wait for your next swing high, which is right here. Boom. This is what swing trading is. You can also do this in the monthly time frame. Oops, M. Okay. I want you to look at this candle here, the absolute bottom in our 786. And if you want to see it one more time, I'll show it to you. Show you how perfect this is. Okay. Price repeats. It does this all the time in every time frame. Equal. I just showed you this same setup up there in the weekly right here. Equal lows, snaps in, 786, 1, 2, 3. Closure of this candle, compression, targeting the high. Bang. Swing break in the monthly time frame. Hey, we're in a downtrend. Follow me on YouTube, guys. Check it out. We're going to 10K. Oh my gosh. Oh man, it annoys the crap out of me. So many people got led to death here, and it's very unfortunate. And if you're not keeping score by now, come on, guys. Those guys on YouTube that think that they're hot stuff, they're not making money. I can literally, when you start getting to a certain level, you will see the phonies. They shine bright and you can see them from space, lime green suits. Wow, is it ever obvious? Anyway, that's why I love this group. I love Sam. It's like, you guys have no idea. If you just join this group and you're thinking about leaving, oh man. Don't do it. just hang out for a while. Okay. So anyway, back to swings and trading swings. Where's your next swing high in the month? Right there. Bang. Okay. But then you got a swing low here in the month. Never broken. It did on some exchanges, but you got another lower, higher, sorry, higher low, lower low, higher low, bang. Totally annoying. Would have had to wait for another swing low if you weren't still in off this one, this one, this one. These were all great. Now this one, you would have seen a little bit of heat. Okay. There is no holy grail in trading. I need to get this very clear right now. There's no holy grail. The holy grail is risk management and you managing your losses and your money properly. That is the holy grail. Have you ever wondered like what all these different trading styles, which one is the actual one and which one actually does what it's supposed to do? And how can I get 100% win rate? It's not going to happen. Okay. It's not going to happen. It doesn't work that way. But all of these trading styles, Elliott wave, harmonics, supply and demand, Wyckoff, whatever is going on, smart money, doesn't matter what system. It's all relying on risk, money management, and self-control. Okay. That's the common denominator. You can find consistency in anything, but you have to stick with it. You have to stick with that one thing. There's hundreds of ways for you to enter a trade. You just need one. So that's how you play swing lows in the monthly time frame. Okay, for you swing traders that can't be in the charts a lot, right? If you were playing that 1, 2, 3, would have seen some heat. That low never been broken. Been wait for this guy. Do you want to take that trade? I wouldn't. I would want a compression candle like this one for the third candle that confirms these three as the swing low. I would like that to be there, but it wasn't. It was like expansion candle, not my type of entry technique. So waiting for, that guy there. We nailed that low this month. That was awesome. That was just freaking awesome. Okay, so we nailed that low in the month. And how was I comfortable in calling it? Well, in the day, look at what happened in the day, you guys. Swing traders discount 786. I just showed you this on the monthly time frame, right? 1, 2, 3. Closure of this candle confirms that this is a swing low in a discount, targeting that high. The highest high of the candle that made the swing low. Okay. Then we had 1, 2, 3, another swing low. So we can also target this high. Then we had this one, 1, 2, 3. So now we can target this high. Now we got 3 swing lows happening back to back to back. There's the money printer in, this is for your notes. 4-hour money printer is a daily swing low. Okay. Remember, don't be allergic to your higher time frames, you guys. This is, you want secrets, you want to learn where price is going and where it's likely going to draw to next. Monthly, weekly, daily. That's all you need. The smaller time frames are just pinpointing entries. Get the heck out of your 1-minute time frame. Bear flag right here. Liquidity pool right there. Pay the trader. So swing trading, right? So now we've got a swing low in the daily. On your weekly, we've got a swing low in the weekly. 1, 2, 3, highest high of those 3 candles. What do you know? What do you know? So last week we confirmed that this was a swing low in a discount. Boom, right up to a premium. Okay. Very cool. Very cool indeed. Just before I forget, go over anything else. I think that is about it. Now I'm going to go through. Oh, yes. One more thing. The risk management. So everybody have this little thing that I put in the learning library up on your computer. Okay. I'm not going to switch screens. Just have it up in front of yourselves here. I want you to notice what happens when you take a 1, 2, 3, 4, 5, 6 loss streak. Now, this is for a $150,000 account risking 1% per trade. You can see that trader B or trader number 2 on the right-hand side is down 9 grand. The trader 1, who is a little bit more responsible and has a fine-tuned money management and risk management plan, took a series of 6 losses and dialed his risk back in half every loss, and he's only down $2,650. Now I know a lot of you guys don't have a $150,000 account. Okay, this was for my funded students, and it's the logic is the same. The concepts are the same. Everybody here is going to take a losing streak. Every single one. You're never going to be void of this. It does not matter who you think you are. You are going to take a losing streak. I take them. Sam takes them. My mentor takes them. And he looks like he invented the charts. But I'm telling you, you are going to take this streak. So you can either be trader A or trader B. You can either take your equity curve and slam it right into the ground, or you can have a nice soft plateau, because guaranteed one of your next models is going to hit, and it's going to make back. Wait, you can. It's how much? What is it easier to make back 2,600, or is it easier to make back 9 grand? Is it easier to deal with a mental capital loss of $9,000, or is it easier to deal with a mental capital loss of $2,650? I mean, these questions they're rhetorical. You already know the answer to that. So this trader B, who risked 1% every trade, is now down 9 grand. So he now needs, if he's risking 1.5, now he needs like he needs like a 5-to-1 R to make that all back. And that's going to be really tough to get when you're down a lot. You're going to be expelled mental capital, and you're not going to be able to hold till full pull. That's the whole thing. That's the whole idea here. You want to remain in the game. You don't want to be, and for anybody watching this in the future, I'll post, it's in the leverage learning TA questions and answers. You want to have a nice soft plateau and preserve your mental capital and your capital too. Like this is the fine tunings of the business that you run. CEO of U Inc. And I'll run through the comments. Home Bass, what's up, bro? Mike W, we're up. Your last name's Crouton? Can you briefly run through your monthly model that caused you to buy the bottom? Just because you asked so nicely, maybe, yeah. What was it? It was a month, yeah. Oop. Consequent encroachment of this fair value gap. That was my bottom call. They just took my money. I know, right? Don't let them. Don't let them. Yeah, ego traders. Everybody wants to be right. Yeah, some people. It's when I say I have a bias, I say I have a bias based on where's the pool next. Price is going somewhere. Okay, it's going. It's gravitating towards somewhere aggressively, and it's usually people's liquidation points. So my bias is based on where is price likely to draw to, based on where is the liquidity. Having a bias isn't taboo. My private students see me recalibrate my bias. They see me counter trade my bias. I could be wrong in my bias and still be profitable. Having a bias isn't taboo, and it's not like the most grossest thing in the world. And it's just funny that everybody's like, oh my gosh, you have a bias. It's like, I don't have $6 million in Bitcoin. I don't give a crap which way it goes. And the price is totally irrelevant to me. I just want to know, where's my model? That's it. Yeah, you all are on a risk management challenge now. Is it possible to watch these after? Yeah, absolutely. Make sure you like save the link in a notepad or something. My mentoring and tutoring is all private. You don't have permission to share them unless it's with your very, very close family. And I mean, I can't stop you and probably won't bust you, but Fit, you're so funny. Yeah, that dude last night, that was so awesome. Oh man. Stop looking at my curve, big Irish. Yeah, it's okay, man. You left. I thought the point of using 1% is that you accept the losses and the model plays out over time. Having this daily risk by half Dial risk by half ideas. You're so fresh on the scene. Oh no, that's not you. Hold on. I thought you were somebody else. I thought the point using 1% is that you accept the losses as the model plays out over time. Haven't this dial risk by half idea? I don't know your question, buddy. You're gonna have to rephrase that. Yeah, see, Fitz got it printed out in front of him. He's got a different one. I made a couple of these, but yeah, you can see that trader one is down quite a bit more. Hold on, what the heck? Yeah, trader one is down quite a bit more. Why is that number different at the bottom there, Fit? You got 4707 and 4887. That doesn't look right. I know I made that, but it just doesn't look right. Why doesn't it look right? Huh. Anyway, there it is. Love Learning's got it. Yeah, everything that I do is all EST, just so you guys are aware. If I'm shouting out a time, it's always going to be New York. Yeah, thank you, Love Learning. Awesome. Awesome. From why do you say Bitcoin has never been in a downtrend? Can you show me what you mean? Yeah. Yeah, show me where this is where Bitcoin started. Now you show me where Bitcoin entered a downtrend. Show me where it broke market structure, not a shift. Show me where it broke market structure. It's almost like it never happens. Look at this one. The very first cycle of Bitcoin ever. You ready for this? Y'all ready for this? I don't think you're ready for this. Wayo hits the 786 and launches. Unbelievable. Bitcoin's never been in a downtrend, man. It's only gone up. It's had periods of retracements, and you call them bear market because those corrections last a long time, but it's just a retracement. Wow, he says, take it from down 30K. I'm in the dumps. I know, bro. I know, man. And like, there's only so much I can do, and I find myself getting emotionally involved and attached to your guys' successes and failures, and I I'm just so empathic, and I feel like I take personal responsibility, and I can see why Sam teaches the way he does. He expects you to figure it out. He doesn't want to hold your hand. He expects you to do the hard work. He gets, you can see it. He gets frustrated. Some people, they just won't submit. They won't get it. They won't practice. They still got, you guys see those people with indicators that nobody uses in our group talking about Elliott wave, using indicators that have little buy signals on them. My goodness, you guys know that those little buy signals on the indicator is just the RSI crossing the dotted line? You're welcome. Like you guys, like it's frustrating. It is. It's absolutely frustrating when you're trying so hard. And that was my whole point in me making hours long videos and having an average. I couldn't care less about ad revenue. I am not a YouTuber. I don't desire to be one. I don't ever care to be one, and I'm never going to be a YouTuber. Period. I don't care about monetization. I do really good with trading. None of that stuff, none of that internet stuff is just like phases me at all. What was really disappointing was putting in hours of work and then people being like, oh, I watched your psychology video. You watched 5 minutes of it and you fell asleep. Your TikTok brain went somewhere else. And that was so discouraging because had you watched and I know who watches them all. Okay. It's not that it shows me on the analytics. It shows me in you as a trader and what you're doing. Okay. I can tell who watched the full psychology episode with the weekly swing trading it's the same thing I just showed you here. It's trading a week, the higher time frames for the working class heroes. I know who's watched it all. My money printer model. video, an hour long, has an average watch time of 12 minutes. How is that even possible? I'm floored that that's even possible. Because like I just showed you, it repeats in every time frame, hundreds of times a day, and that's all it does. It bounces off of 786s, and all you have to do is find one. So like people, that's what I'm saying. Like when I see people in the 99 doing stuff that their own way, it's like, what on earth did you even come here for? I thought you guys wanted to make money and get educated. And D-shuffle, man, you know, I'm pretty much speaking to your heart right now, and you can feel it. And you're not the only one, bro. Okay, I promise you that. You're not the only one. I also pin the risk management chart. Nice, nice, nice. It's just a little tool. I don't want to be putting I don't, you know what I mean? I'm just here to help Sam in the learning library. I'm not here to, you know, take over. Take over his stuff. But you know, that risk management is a pretty good one though. Master friend, I wanted to gather even more details or just see more examples. Would you recommend starting at the beginning of your leverage mastery videos or start his most recent work towards the first posted video is watched whenever it comes out? You know what, man? The Friday ones have the have a lot in them. The Sunday ones typically have a lot in them. The Tuesday ones are just like, you know, can we find the bottom of the week or the top of the week? Right. Zen, good morning. I watched even before I started trading. Dude, that's cool. Currently halfway through your tough love and encouragement video. Love it. Joining Leverage Mastery later today. Ooh, thank you, Christian. Welcome. Friend, open, low, high, close takes all the anxiety away. Something so simple, but you're the first to say it the way you said it. Thanks. You're very welcome. Yeah, it's one of these phenomenons that repeats that just eludes most traders. Open, low, high, close. All right, and I'm going to give it to you. And we do, you guys have been with me while we do this on a daily basis, basically, when it's obvious, okay? When we open this month here, we traded down first. And everybody's thinking, oh my gosh, selling pressure. No, not me. I'm looking to reverse and railroad all those suckers that think that selling pressure is a thing here. Okay, so once we find that bottom and this candle's bearish at the time, right? I'm bullish on the market. I am not bearish. I don't care if we come down to 24 grand, we're still bullish. Okay, we're bullish until we take that low. That's how it works. I just showed you in the month. Went back, all-time history. We are bullish until we take this low, period. That's how it works. So even if we come down here, I'm still bullish. I don't care if we trade all the way down to $24,000. I'm still bullish. I will look for shorts, sure, but I'm still bullish overall on the market because where we are in the environment. But anyway, open, trades down, creates a low. How are you going to make the tail of this candle if it doesn't trade down first? You see? Do you see? How am I going to make the wick of this bearish candle if we don't trade up first? Open, low, high, close. This is why it's important for you to have a bias. Where is price likely to draw to? Well, there's stop losses right here at the all-time high. Sure looks like it was reaching for something very specific, and once it found that, it stopped. Open, low, high, close. You can front run this idea as a swing low. You guys have seen that the confirmation candle of the swing low blasts off. I'm going to give you one more little piece. Okay. That right there in the month, go the week. Swing low, 1, 2, 3. Okay. So you can front run that swing low there that you are anticipating, you're forecasting. That price is likely going to want to run to these double tops. Forget up here for now. That's irrelevant. Okay. There's equal highs up here. Obviously liquidity, and you can even stretch that there. Okay. In the week, you've made a swing low in your discount. So then you go to your month and you're going, okay, we made a swing low in the week. Man, if that monthly swing low creates, it's going to freak out, and freak out it did. Right. So you can front run your bigger time frame swings by using the lower time frames. So for example, let's just do one more little thing. Let's reverse engineer what went on in this low here. Okay. So this candle was the swing low, 1, 2, 3. So let's put a candle there. Then let's go to the week. Okay, so that was the swing low in the month. So week 1, 2, 3. There's your weekly swing low there. Okay, then we go to the day. Okay, their day, there's your swing low there. 1, 2, 3, same thing. So let's go to the 4-hour. There's your swing low there. 1, 2, 3. So let's put a candle there. Let's go to the, well, let's just go to the 15-minute. If I can get back this far, might not let me. See the little duck. Ah, crown. It's not a duck anymore. I thought it was a duck. Yeah, we can't get back there. Anyway, you can freaking literally reverse engineer swing lows in a discount. And then by doing this, you can anticipate them unfolding from your 5-minute, then your 15-minute, then you snap out, make break market structure, then it has to come back. Now it's making a swing low in the 1-hour, then in the 4-hour, then in the daily, now in the weekly. Now you're gonna, holy moly, this thing's gonna leak out to a swing low in the monthly. I better get the hell in. And then boom, it can snap out for you guys. So the next few months, you guys have your missions. If you're already comfortable with price and you have a model, you're trying to make a bill, a very small one, consistently. Prove to yourself you can do it. Don't tell yourself you can do it. You show yourself you can. If you're still finding a model, that's okay. Okay. And let the chart sing to you, but you got to do this in a demo. Okay. If you're just brand new and just starting, don't put so much pressure on yourself. Don't convince yourself that you have to get this at a specific time. Just enjoy the ride. Okay. Thank you all for joining. I hope you all found this insightful. God bless you. Have a great weekend. And you guys, if you have any questions, hit me up in the learning library. That's why I'm here. And we'll see you very soon. God bless you. Thank you. You're very welcome. Peace out.